Well, welcome everybody. Thanks, Rich and Jennifer and everyone at Health Plan for having me on and letting me discuss and teach you all about my product. So I'm really, my theme today is, no group too small. I'm going to talk about our product. It's a level-funded product for 2 to 200 employees. We have a small group product for 2 to 50, and that's where majority of the business that we write comes in that 2 to 50 space. And then we have a new large group product, 51 plus, that we will have. It's brand new, actually, effective 1/1. So there's a lot of exciting things to come on that, but I'm not going to talk about how that product works today. It's really going to be for another conversation. So I've been working with Health Plan Services for a couple years now. And you guys may have known me as Michelle Callahan. I changed my name over to Hamilton last year, so if you ever heard of me through Callahan, that's still me. But here's my contact information. I will be sharing this presentation after the call, so you guys can have my contact and of course your sales rep over at Health Plan Services. They all know how to get a hold of me. So I'm going to first start by talking about who National General is and kind of where we started, where I came from. I actually have been selling this level-funded product. Back in the day, 5 years ago, we called it partially self-funded for small groups, and I sold it with Assurant Health. And then in 2015, Assurant Health went up for sale, and we were bought. The group self-funded product was bought by National General. And just everything from Assurant, went out of business. The individual, the group, fully insured except for self-funding, which is what National General invested in us. And we have been, we came in as Assurant and really took over how the product works. Kept our same team, our same underwriters, and we've been having record-breaking years ever since the sale. So we're known for our P&C lines, so the auto, commercial lines, and then you'll see the employee benefits side as well, but we're huge in the P&C business. So we're an A- rated carrier. And if you've heard of Assurant level-funded product, the partially self-funded product that we've been selling for 16 plus years, this is the same exact product. The only thing that changed was now National General is our reinsurance company. We are paying our own claims, so we're not shopping out our claims. We're paying them. You'll see here we actually reinsure other carriers, other level-funded carriers out there. We're reinsuring their blocks. It's a little bit about us and what we're doing, and lots of exciting things to come on our future. Okay, so I'm going to go over, these are the topics I'm going to cover. Just really going to simplify level funded for those who've never sold it or never seen our product. I'm going to go through a quote. I'm going to talk about our niches and where you'll see us the most competitive or what we can do compared to our competitors out there. You'll also talk about plan designs and where we're available in different states and where we're hot in different states. So, where are we most competitive throughout the country? We are in all states except for Hawaii. So it's good to know, and I'll point those out. And then we'll talk about quoting, pre-screening, submissions, our timelines. I'd say we're one of the fastest carriers that can get groups submitted and implemented and ID cards out. So that's one of our pride and joy, and what I always try and let you guys know that we're gonna get your groups done as quickly as we can. And as best as we can. And then we're going to talk about our new Teledoc program and our new product, Core Value, which is a reference-based pricing model. And we'll go into a short, not too large detail on that product, but we definitely will review it. And then I'm going to talk about associations right now. So associations, it's something that we're really looking to get into and bringing out some sort of plan, marketing pieces, and it's in the works. So we don't have a program right now that is designed towards associations and marketing and overrides, but it is in the works. So it's something that's going to come out, and as it does, we'll certainly let health plan know and set up another call to teach everyone about it that's interested. Okay, so if you remember for the first slide, I said no group is too small. It's self-funding, partially self-funding back in the day, 5 years ago, or really many years ago, was really for your mid-market larger groups. Well, now what we're doing, 2 to 50, some people will, I'll tell them on the phone and they'll laugh and they'll say a group of 2 on a level funded plan just doesn't work. And that's absolutely false. We are very competitive on groups from really 2 to 50 in my market, and then the 50 plus is our large group market, our mid-sized group market, but we're very competitive. And so what we're doing is, unlike fully insured, where your premium just goes straight to the carrier, non-refundable, with level funding, partially self-funding, the group is going to be broken up into those 3 segments. We're going to have, their claims, the stop loss, and then the admin fee in their premium, and then they can have that potential savings. Obviously, that's going to be there, the potential savings, but then they can get the claims dollars back at the end of the year if they don't use them. So that's every group wants our product. Everyone wants level funding these days, but not everybody qualifies. So the biggest thing is the underwriting and in getting. Do you have a healthy risk? And maybe you don't know. And I'm going to talk to you guys about field underwriting in a couple of slides here. And so you guys can really see where we look at certain risks. Some people think a group of 5 diabetics would be a decline, and it's absolutely not. So I want to point those out as well.
5 diabetics.
Okay, so like I said, just like fully insured product, it walks, acts, and talks just like a fully insured product. There's one monthly plan, that level premium that you hear out there. There's no added claims at the end of the year, so if you go over our projections, you're not going to owe $1 more to us. If you go under, that's when you can get a refund. There's no extra work for the employer. A lot of agents think that there's, all this extra work that goes into it. Really the extra work is on the front end, getting the applications. And if you see the rates compared to fully insured, you're going to see in some instances you can save 50%. I've quoted groups, and they say the employers will say this is too good to be true because this is half of what I'm paying now. So and that's a really good point to let your groups know there's really not any extra work except for on the front end, because what we're doing with our plan, we're taking care of the administration, the reporting, all that stuff, which I'll talk about in the next slide. And then also the flexible plan designs, where all of our plans are compliant. We have essential health benefits in our plan. And that's a big one that I get asked a lot too. Are you compliant with the law? Absolutely. Asking your groups the questions, when was the last time you received a refund on your premiums? Those are important questions to ask your groups to see if they even are looking for this type of solution. And then I wanted to point out, I did talk about this, but we are the longest carrier to have a small group, partially self-funded plan, 16 plus years with Assurant. And again, it's the same exact product that we were offering over at Assurant Health. So here I wanted to go through a run of our quote and really show you how it works. So when you get a quote from your sales rep, they're going to have this page in our National General quote. So it's always a third page. The page after the plan designs, you'll see whatever you saw quoted, maybe it was a 5,000 100% plan. These are the rates. Let's just say this is the rates for a 5,000 100% plan. Based off of the enrollment, what we're doing is we have a composite rate, so 4-tiered rate structure, and you'll see that in the monthly bill section. So we're taking your census, your SIC code, your ages, your genders, and we are coming up with this monthly bill. And then basically, we're coming up with the total premium by multiplying how many employees, employee spouse, and child and families are enrolling, just like fully insured. I just want to point that out. It's really the exact same, except now fully insured is age banded. So that's not any different. That's how we're coming up with the bill. So really going to direct your attention down at the total monthly premium, that $15,000 amount. That is the maximum exposure of the group. And I say this because you will never owe $1 more to us after you're paying your monthly premium. So if you have $1 million in claims, we lost a lot of money on you, but we're not going to come after you because we're a level funded plan. We can. And what we're doing with the $15,000 is that we're breaking it into 3 different components. Like I was saying a couple of slides before, is that you do have the 3 components of the stop loss, the admin, and then the claims component. So we're taking that $15,000, and then what we're doing with your money behind the scenes is what's making this level funding. The stop loss premium of $5,000, we're cutting that portion of the premium and we're paying ourselves. We're the stop loss carrier. The admin, $3,641 amount, we're taking that. We're paying commissions. We are mostly paying our TPA. We have 3 different TPAs. Most of the time you'll be working with Allied Benefit Systems out of Chicago. We also have Meritain and Cigna. And what we're quoting the most competitive and the plan designs based on what you're asking your sales reps and sending us your census information. That's my job, to quote you the best one based on what your group is looking for. So that's part of the admin cost, and we're taking that cost and we're paying them. So those are the 2 pieces of the plan that the group will never see back, that money. The claims pre-funding amount, the $6,000, is the group's money. So this is what we are taking aside every single month. We're setting it into ABC Group's claim fund account. So it's just a virtual account. It's not accruing interest. We're setting it aside every single month. And it's accruing, it's growing as they pay their monthly premium, and it's falling as claims come through. So $6,000 of times 12 monthly payments is going to be $73,000. If you glance at the top, that's the annual aggregate limit. And what that limit is the amount of claims we are projecting the group to have over the 12-month policy. And this is 125% of expected claims. We also don't have a minimum attachment point. There are many other carriers out there that do. So if you don't know what a minimum attachment point is, please ask at the end of the presentation. It is really just a way in which that if their census drops in half, that the group would have to fund to. So it's another risk. And then the aggregate limit, is the refund potential. So $73,000 that we're expecting this group to have. Let's say they have $50,000 in claims. There's $23,000 left over. We're going to take either half of that and give it back to you, or 100%, whatever you choose at time of writing business. So you can choose a 50% refund or 100%. 100% refund is going to be a little bit more expensive, but we do have it as an option. Sorry, go back one. I didn't mean to pause. I want to talk about the specific limit. This is the This is a specific limit based on per person. So if one person has a high claim of $100,000, they're not eating up the entire aggregate limit. It's really protection of the refund, and it is per member, not per family. So it's just really a protection, and we can build that in to really whatever you want. We have the 10,000, 15, 20, 25, 30, and onwards. The higher you go, the less your premium is. Here, I could build in a 50,000 spec limit because it's still under the ag, but it would decrease your premiums. Okay, so unique program features. These are what make us different from other carriers out there, and I'm really going to point these out and ask questions at the end if you want me to elaborate on anything that comes up here. But virgin groups and startups, we will write them. Startup companies, even if they've been in business for 2 weeks or a month, whatever it may be, they don't have to have a W-2 to start on our plan. So we'll accept a payroll record, or really whatever they have, we will accept. And then virgin groups, we accept. We can write a 15th of the month start date on all groups except for virgin groups. We have what I mean by flexible eligibility here is that we are able to carve out the hours of the employees. So for full-time hours for 50-plus FTE groups, they have to be 30 hours. As ACA says, but for us, we can do anywhere between 20 and 40 hours. So if the employer wants to only make those that are work 40 hours eligible, they can do that with our plan. Now, make sure that they're under 50 FTEs, or else they could be subject to the fine. So with that being said, it's really make sure it's on small groups and not your larger groups. But we see groups all the time, those 2 life cases that just want to offer it to those that work the 40 hours. We can do that. Flexible participation. We're flexible here, and if we're close on participation, we will absolutely waive the requirement. So our participation requirements are 50% of the eligible class has to enroll. Or if we can't make that work, we'll say 75% after valid waivers have to enroll. So it's either or, it's not both. So 50% of the valid waivers, or 75% of the valid waivers have to enroll, or 50% of the eligible class. And if we're close, if we're, just come to your sales rep, and we'll try and find a way to make an exception. We will make an exception. So that's a good piece to know. Flexible plan designs. And I'm going to go over this in a few slides, but we have thousands and thousands of different options. It's all a la carte. It's not canned plans. And that's another huge reason why agents love to quote us, because we're not just quoting you, Silver 1 or Silver 2. We don't have to follow the metallic rating that fully insured plans do. So we'll go over those in the next slide on what we're offering. This is a big one, 1099 groups. A lot of people ask, can I cover my 1099 employees? Absolutely. We will make those employees eligible. You just have to sign a form that you're making them eligible, and that's it. And if you make one eligible, you do need to make all eligible. So you can't just make 4 out of the 30 eligible. And then also multi-location discounts. We offer a 5% discount if you have 3 or more members, including a family, outside in a different state. So if you have a group of 5, 4 of them are in Florida, and then 1 member with his family is in Georgia, you're going to get a 5% discount. And we offer that because we've been doing this plan and underwriting them for many years. So we have historically seen those groups have better loss ratios for whatever reason. Management carve-outs and any other carve-out you can think of. we will do it. So if you have a group that just wants to offer their admin staff the health insurance, we can do that carve out. Whatever you define, we'll accept. We're writing a ton of management carve outs. I did kind of talk about this already, but faster than normal implementation. We're really fast, not only with quotes, pre-screens, and submissions. It's really implementation and getting your ID cards. So I had groups that were implemented 1/1, the busiest effective date. They're issued on the 1st, and they had ID cards by the 6th. So we were super fast. We really staff up our teams during the busier times, and we're really able to get those groups turned on and get you what you need, your temp ID cards as soon as we can. Free COBRA on all group sizes, so no matter if you're 20 or less, you can offer COBRA, and we'll administer it for free. That's only on the medical, not the dental or vision, just the medical. And that's with any of our TPA that you select. Free reporting and easy administration. I know this is really important to a lot of agents. How do I know how my group is running? Can I see different claims? Absolutely. You as the agent can see all that stuff. You can see a lot of different reports that we generate on our website that our account management team will walk you through when you get your first group on the books with us, or if you already have groups and you don't know we have this capability, definitely reach out and we can get you a full rundown of what we offer. Easy administration. We are building out the ability to turn people on the Allied portal. So you can turn people online, and then for adding people, it's always going to be an application, so that's not going to change. But we're looking at ways to make it easier so we can file feed it over to underwriting. So these are going to be online capabilities that we are rolling out in the next couple of months. And you can also look at bills, you can look at ID cards, you can look at your employees' birthdays or whatever you want to on our portal. We make it really easy, a one-stop shop. And then also as the reporting, the only other fees that you have on the level funded groups are going to be your PCORI fee. And that is due every June of every year of the following year that you are termed off the books, or your renewal hits. So if you're a 1/1/17 group, you ended your policy 12/31 of 17, your PCORI fee is going to be due the following June. And we're going to, even if you're off the books or you renewed with us, we are going to let you know that this is due. And we're gonna send you an email, and we cannot file the fee for you, but we will assist in every way. So that's just the only fee, and it's $2.67. I believe that's what it is this year. May have gone down, but per member per year. It's a really small fee. And then the other reporting tool that's required, the 6055 and 6056 reports. We're helping all of our groups. We have a Xywave portal for every single group, whether you're termed or not. If you're on the books with us in 17, you're set up on our portal, and we will help you generate these reports. Just all you have to do is upload our census from our portal, and your reports will generate. It is a 1, 2, 3, I don't know how many steps, but it is a lot of steps. And that what we're going to do in our account management team is on standby to take your calls and help with these reports. Hopefully we don't have to do them next year, but stand by on the law and what changes there. But we are assisting with them this year. Competitive commission, I wanted to put that in here. You can dial up as high as you want. Right now, our small groups, you're going to get 7% of the total monthly premium. So we're paying off that total bottom dollar, but you can dial up to 21%. And most of my agents probably dial up anywhere between 8 and 10. And that will just directly affect your rate. So if you're at 7% and you want to dial up to 10, your rates are going to go up 3%. This is a big one. You're going to get a refund regardless if you renew with us or not. So if you have that refund and you have those dollars left over in your account, we are going to give them back to you even if you leave us. I want to say we are one of the only level funded carriers that do that. We have a 36-month run-out period. So this is kind of a little dicey, so let me know if you have questions on this, but it's a 12-18 contract. On the 18th month, we're going to assess your refund. If you have claims left over in your account, we're going to give them to you. All right, or claims dollars, we're going to give them back to you. On top of that 18th month, you have another 18 months of run out in which if any claims come through, National General will pay them. So it's a 12-18-36 contract. And a last kind of pointer is that we do not laser. We will not laser conditions. We will not laser prescriptions. We have a full drug card. Our PBM is Cigna. And, you know, a lot of the times, I'm going to talk about this on the next slide, I think you will see, actually, it's in a couple of slides, but you will see high-risk conditions come through, and those can decline the entire group. So you have a group of 5, and there's an HIV in there, your group will be declined. We will not laser it out. These are top industries. I'm not really going to go into full detail here, but a lot of our groups that we're writing come in these industries. One that's not showing up is going, oh, never mind, IT. That's a big one. A lot of healthy people in that industry. But I would say construction, you know, your HVAC, that's a huge one that I see myself writing those groups all the time. So plan designs, we have PPO options, HSA, we have HRAs as well. Like I said before, there's such a flexibility with what we offer. CAN plans, we have a whole brochure and packet that you can see our plan designs and you can really pick and choose. You know, I want this, that, and that. You know, or you can say, hey, quote me your most competitive option. And what we're really known for, I mean, back with Assurant as well, we were really known for our HSA plans. That's where our best discounts come. You know, obviously if you're on an HSA, again, that employee is trying to control their costs. So when the employees are really controlling their costs, they're helping out the employer and helping them control their costs and hopefully get a refund at the end of the policy year. We can do dual options. We have multiple co-insurance plans. We got 50, 70, 80, 90, 100%. Like I said before, we do meet minimum value, or we do have, we do have essential health benefits. We do meet minimum value. We are not required to have to go by the state mandate. That's a question I get sometimes. Do we follow the state mandate? No, we don't. We do not. We're not required to follow state mandate. Networks are Cigna and Aetna. We have Cigna POS. We have Local Plus. We have PPO. We have OAP. And we have so many different networks with both. And with Aetna, we have POS and PPO, or their ASA. So we have so many different options. Again, and we're going to quote you based where your group is. We're going to quote you the best network, not necessarily the most competitive. We're going to quote you the best network of doctors based on your zip code. Here's a map that I was referring to earlier. The red are very hot markets. I mean, very competitive, where we're writing a lot of business. Same with the green. I know it says warm, but we're still so competitive in the green. But you'll see, you know, I'm in Georgia, so I'm in the Atlanta office, and you know, the amount of of how we are so competitive. I mean, sometimes we're, like I said, 50% below in some areas. So it is, this is a really good reference point. You know, if you're in any of these red or green states, good stuff. I mean, definitely look at our quotes and give us the opportunity to underwrite your groups. The blue states are a little bit tricky because I would say Louisiana, that should be a green state, but the blue states, you have some funky state laws there that just really make it's hard to get competitive. Like for California, there's a minimum specific law that really makes it hard for us to be competitive on the smaller groups. Field underwriting, I wanted to put this first bullet point, solutions on every group. I will do everything that I can to find some type of solution. So, you know, if Todd and Amy or Peggy, they're sending me and Jem these cases, and I'm telling them, listen, it looks like all the employees are very healthy, but the spouses are what's driving this entire group to be declined. And sometimes those groups say, wow, I didn't realize that the spouse is making our insurance, you know, so high. So if you're under 50 FTEs, you can carve up, again, that's a carve out, and it's completely legal. It's a dependent carve out. Children, I don't really recommend, ever carving them out, but we see, employee-only groups from time to time. But I'm going to think of every solution I can to try and help you get the sale. And there'll be times where your group is just not a fit, and there'll be those instances that come up. Really, I see it, every month. With all the cases that we're pre-screening, there's a lot of really healthy risk out there, and then there's some groups that we just do not have any type of solution for. So field underwrite your groups, if you can. Do you know the health of your groups? Do you know that there's a current cancer that was just diagnosed? If you know that type of stuff, tell your sales rep. And I can tell you right off the bat, I have our underwriting guide, and I can tell you if they were just diagnosed with prostate cancer, I'm going to know that rating, and I'm going to be able to apply it to your quotes and get you the more realistic quote rather than the base rate. Or I can just tell you, hey, that is not going to work. That is going to be a decline. So you don't waste your time. And that's really important to know that I'm here to use as a resource. Don't ever feel like you can't call any of us and your sales rep and say, hey, this group has a hepatitis C. That's really a decline for a group under 20 because it's such a high risk condition. Injectable drugs, those are drugs that are covered on our PBM, so we're going to rate for them. So if you have a group with Humira, $6,000, $7,000 drug a month, it's not going to be a good fit. I put recent back surgery. I put that in here. This is not a decline, but I did want to talk about this because a lot of time we'll see this. It's a very common condition of chronic back pain. If they're taking hydrocodone or a narcotic every single day, it's a high-risk condition. But if they're taking it as needed, which most of the time people are, then it's not. So those type of things that I'm going to, if I see it on an app, I'm going to go to your sales rep and say, hey, is this as needed? Are they taking this every single day? And get the right answer, so we're getting underwriting the correct answer. So what I'm doing for you guys as agents is battling, being that middle between and finding, hey, underwriting, you're rating this wrong because this employee is actually taking this medicine as needed, and they'll come down. So that's a huge reason why having your sales reps and coming to me is so important, because I'm here to get you the best rate. I'm going to go to the very end to get it with underwriting. I negotiate every case with underwriting when I'm going through pre-screens. And then pregnancies, we know this is a risk that's coming, but it's not high risk. We're going to rate for it in a small group of 2. If you have a pregnancy, then it's definitely going to be it's probably going to be a decline because we know that claim is coming, or it's going to be a high rate up. So it really just depends on the group size. If you have a group of a ton of pregnancies and a small group, it's probably not a good fit. One thing that I wanted to talk about that wasn't on that last slide, but groups or conditions that aren't high risk. I meant to put a bullet in here, but diabetes, things that we don't rate for. Let's start there. We don't rate for depression, anxiety, ADHD, GERD, cholesterol, high blood pressure. Those things we do not rate for unless they're associated with diabetes. So if you have a ton of those conditions with diabetes, then we'll rate for them. But diabetes alone, if they're just diabetic, those are such low risk conditions. They're not really rating. For the diabetes, it's a very small rating. But also for diabetics that are smokers and have a lot of different conditions and overweight, that's a high-risk diabetic, and we'll see those from time to time. So those are just things that we see every day. The depression, anxiety, we see those all the time. That we're just not, there's no rating for them. So submitting business, we'll get you, like I said before, we're fast. We'll get you a quote in 24, 48 hours. You present to the employer and then get those medical apps completed. Whether it's a competitor's app, it's paper, electronic, we will take competitor apps. Obviously, I prefer mine because I can give you a final rate and negotiate with underwriting. But if you send me a competitor application, then I'm not going to be able to negotiate with underwriting. But I will be able to give you a ballpark rate. So we do accept the Allied National app, the All Savers app, and the Cigna long form for final rates, as long as you have, at time of submission, just a NatGen signature. So I will accept, again, Cigna long form, All Savers, and Allied National for final rates. But again, pre-screening off our apps will give you the best rate up front. 48 to 72-hour turnaround. Sometimes it's a little bit longer if I'm negotiating, but I'll definitely communicate that to you and the sales rep if I'm at that point. But we're fast. Sometimes right now it's because it's slowed down. I get a pre-screen back in less than a day. With health plan services, because they're one of our top preferred GAs, general agents, we are giving them a last look process. So again, I'm going, like I said, I'm making sure that I'm going to on every case that looks sellable, I'm getting you the lowest rate that I can. And then from there, if you like our final rates, then it's about submission. I give you my submission packet. It's pretty straightforward, tells you what you need, the one fillable PDF, and then we do ask for the wage and tax and the census. And once you get that to me, we can issue it in underwriting. It takes anywhere between 2 to 5 days, depending on how complete your paperwork is, to get it issued in underwriting. And then we send it on to TPA. You will have temp ID cards 3 to 5 business days, and that's a stretch. Sometimes it's a day. I've seen that happen in the summer. And then lastly, we don't want to forget help after the sale. We don't just sell and forget about you. We're here to help you always. We have account managers and specialists. We have an entire specialist inbox team that's going to be reviewing emails and everyday general service questions. They respond in so fast, hours. I don't know if I've ever taken 2 days to get an email back. That's unheard of. So they're really fast in helping you after the sale. And then, of course, you still have me and your sales rep at Health Plan. So Teladoc, we now have Teladoc. We haven't had it in the past, but effective 3/1, you can add it to your plans for $5 per employee per month. So not member, so if there's 5 employees, It's going to be $25 a month, and I highly advise it because it's free. So you add it to the plan. All you do is call in if you need to use Teladoc, and it's free. It doesn't cost anything to the member. For HSAs, it is a $45 consult fee. So it's still going to be the $5 monthly fee in your premium and then the $45 consult fee. And those fees do apply to your deductible and out-of-pocket max. And the Teladoc, if you do elect in it, that number will be on the ID card. All right, last thing I really want to talk about is core value. This is our reference-based pricing plan. It cut off there at the bottom. I think, yeah, we're good. That's the last bullet anyways. But what this is, I'm not going to go into a lot of detail here because it's really, it's for a select, sub agent on, not everyone's going to want to sell this product. It's really for those that are looking, again, for more rate, a different solution, in essence, that this is going to offer you another at least 10 to 30, sometimes 40% below our already super low rates compared to fully insured. So it's definitely a great solution, but it's not for everybody. So for those that are interested, I'm happy to do another webinar just on core value because it is hot. We are selling a ton of it in Georgia, Texas, and I'll show you the states that we have it in now. It's only in a select number of states. But what it is a reference-based pricing plan. And what this means, it's the same product, same self-funded concept, same plan designs. Nothing's different except for the network. So we're offering this as a no network plan. They can go to any doctor they want. And what we're doing is we're billing the doctors. I'm going to show you the bill rate on the next. I think it's in 2 slides. But we're billing the doctor based on inpatient and outpatient. So the plan maximal allowable amount for covered medical services, it's based on the reimbursement rate. It's $130 for inpatient and $150 for outpatient. And I'll put that up on the next slide. But and that's regardless of what doctor you go to. And there's no networks. And you still have a PBM. So you'll still have the full Cigna PBM. And then transplants require prior authorization. And those are run differently. They're covered. But it's just a different process. And then, sorry. If a provider bills a member in amount of the 130% or 150% that we paid, whether they went inpatient or outpatient, they may get a balanced bill. And so this is the big question that agents have. Well, if they get a balanced bill, what do they do? We have an entire team. It's a phone number on their ID card. We're calling it the Member Advocacy Program, the MAP team, and they can call in and they can say, hey, I got a balanced bill. What do I do? We are going to take care of it. Everything on your balance bill, we will take care of. They won't have to worry about a thing. So I can guarantee you that we're going to take care of your balance bill only if you call us. If you don't call us, you don't tell us, we're never going to know you had one. So you're going to be your employee will be responsible. If you call us, we will pay it. Okay, and so that's a big thing to know. A lot of people think that with a balanced bill, they're going to be responsible for it. Just pick up the phone. I mean, it's a hotline dedicated just for this plan. It's completely separate from all of our other plans. So that phone line. So it's great, and they can also call the phone line, ask any certain questions they have about their benefits. They can ask, hey, can you call my doctor and tell them that I have you guys as a network, because they don't know what this plan is. It's another big one we get. I don't know. The doctor will say, I don't know who your insurance carrier is. Well, call our member advocacy line, and they will call the doctor and set up your appointment. We've had that happen. And we'll call. We'll take care of it. Teladoc is free on this plan, so there's no fee for the Teladoc. That's a feature we've added in, and like I said, it's anywhere between 10 to 40% less than our network plans. And then the select states on this next slide, you will see Oh, that's the sample ID card, but yeah, let's talk about this. The select states, these are where we are in right now. We're going to have another mass rollout here in the next couple of months. I'm hoping Nebraska and South Carolina are on there, but we're so competitive in the Georgia market. It's really, I would say, half my groups that we're selling right now are going reference-based pricing. And then Jennifer, if you go back one slide, yep. You'll see this is what the ID card looks like. And you'll see the bottom left, the 150% of Medicare for inpatient, and then 130% for outpatient, and then 100% for dialysis. So, and then you'll see the teledoc, and on the back of the card is our advocacy team. That's the customer service number, and that goes straight. That's not Allied's phone number like it is on the normal plan. That goes straight to our team. That's it for me. Ending on this slide, just wanted to, I guess, open the floor up for questions now, or however, Jennifer, y'all want to handle it.
What we're going to do on our end is just unmute everybody, so if you can just be conscious of that. We've had a few questions come over on the chat, so we'll attack those first, and then we'll give everybody a chance to kind of chime in with any additional questions that you have. So, Jennifer, what do we have come over on the chat?
So I do have a question here. I'll address, first of all, a few people have asked about the presentation. We will be more than happy to provide that by email. So we can get that out to you by email. If you've asked for that, we certainly will. Or you can expect to receive a follow-up phone call from one of our sales reps just to touch base and see if there's any questions that you have, and they'll certainly be glad to provide that information. We had a question, the first question, and I think you might have touched on this, Michelle, but just in case, I want to be sure this person got their answer. What happens to the breakdown of components, and this was related to the premium slide, so what happens to the breakdown of components into a monthly bill for, if example, an employer with 30 employees lays off 10 employees halfway through the year?
Yep. So that's the minimum attachment point that I was talking about. So basically what happens for us, if they're, let's say on that example, I think the aggregate was $78,000, and let's say that was based off 30 people, that means that for those let's say they laid off 15, and your question reference, they laid off 15 people, there's 15 people left in the group. So your aggregate is literally going to drop in half. So it's going to go from 70 to 35,000. So you're not liable to fund up to that 70,000. Well, and with many other level funded carriers, they are requiring you to fund up to 75% of the aggregate when you first wrote the case. So let's say your aggregate 75 grand, 75% of that, I'm so bad at math, I'm sorry, whatever that is, 50 grand, I'm so sorry. I don't have my calculator in front of me.
That's more like 2/3, but we'll go with it.
Yeah, there you go. So if you do drop, your aggregate drops in half, it drops in half with us. But with other carriers, you would have to fund up to that attachment point. And you should see those on your quotes when you're getting them with other carriers. Like I know for Starmark, for example, you'll see that on like where they tell you where the aggregate is, it'll say minimum attachment point. So just pay attention to that.
Well, this Crichton's got his ass in a mess, doesn't he?
Jennifer, any other questions out there?
Yes, I have one. I just emailed you. I want to know this is Charles, who the reinsurer is, what's their credit rating, financial net worth, and where they domicile this corporation.
Yeah, so I put that on I think it was the second slide, but we are the reinsurance carrier. We're an A- rated carrier. Your other questions, would you say what our credit rating is and how much our company is worth? Is that what you asked?
Yeah, and where are you domiciled as a corporation? Texas, Florida,
Yep.
where?
Yeah, so National General Insurance Company, I mean, I think it's $11 billion. We buy a lot of companies every year, so we're constantly growing. I can get you that exact number, but we're domiciled in North Carolina, Winston-Salem. But our benefit solutions hub is actually still in Milwaukee, where Assurant Health was. We're still in that office building. So and then we have a huge corporate office in New York. So we're kind of, those are 3 hubs.
Okay. So the good news is you are the reinsurer. You don't send it out and get it reinsured by somebody else at a different rate.
Exactly. We are the reinsurance company, National General, A- rated company.
Okay, so we call this number, email back or whatever for quotes. I've got a couple quotes.
Rich says there was something about a question about electronic applications.
Electronic applications, yep. So we'll accept, we're on FormFire and Easy Apps, and we have a fillable online application. So those are the 3 electronic ways that you can do them. And we have an ability to set a group up on FormFire in our house account for free. So we will do that for anybody for free. We'll set them up on our FormFire account and get them through underwriting. I appreciate everyone's time and look forward to working with everyone.